Paul, just remind us, what was the situation like in Greece a decade ago?
Well, I think it's worth reminding ourselves why we're talking about this now, is because exactly 10 years ago this week, there was a referendum organized in Greece on the terms of a new bailout package organized by the then left-wing Syriza government of former Prime Minister Alexis Tsipras. His party had been elected the same year on the promise to end austerity, and his government had advised the electorate to vote against the terms of the new bailout package. Of course, whilst that did happen, the government was forced to capitulate and apply the terms of the package as was presented. Also worth remembering, the week before that vote, there was the introduction of capital controls in Greece to end exodus of capital, obviously. We were limited in Greece to withdrawing 60 euros a day at ATMs. There were queues at ATMs everywhere. And all of this in the backdrop of a country that had effectively been excluded from financial markets for 5 years, that had missed a deadline for payment to the IMF, where economic activity had virtually ground to a halt, where unemployment was massively high, and where there were violent demonstrations on a daily basis. And we didn't know at that time whether Greece would be either asked or forced to leave the euro area. So it was a very precarious situation 10 years ago, and it's the anniversary of that this week.
So that's the history, but let's look to now. What's the picture like today there?
Well, as you mentioned in your introduction, the turnaround has been quite spectacular. Worth pointing out, the New Democracy government of Prime Minister Kyriakos Mitsotakis was elected for the first time in 2019. Since then, 2 years ago, Greece regained investment grade for the first time. The country's borrowing costs are now lower than Italy's. Even though the country has a high debt level, it's now on a sustainable path and is envied by others, some of the euro area partners. Economic growth is above the average for Greece's European partners. That said, GDP levels per capita are still lowish. Poland and Romania, for example, have overtaken Greece. There has been a marked increase in investment. Some big names have come to Greece in the past few years, such as Microsoft, Pfizer. Italian bank Unicredit was the latest to show its confidence in the Greek economy by increasing its stake in Greece's Alpha Bank. And many of the people that had left the country 10 years ago have started to come back. The government did offer some tax incentives for that. And whilst not everyone has come back, people are seeing that there are opportunities here and have decided to return home, as it were.
But Paul, when you talk about that recovery, is everyone benefiting from this turnaround equally?
That is a priority of the Prime Minister, Kyriakos Mitsotakis. He mentioned that this week, actually, given the anniversary of the referendum, saying his number one priority is to make sure that everyone benefits from this economic improvement. Greece, in fact, is one of the few European Union countries that's achieving primary surpluses, budget surpluses, sorry. And that is enabling him to be able to, for example, increase benefits. He's increased several times the minimum wage. There is more work around. But despite all of that, I think most people would agree that the benefits of that have been effectively cancelled out by the higher cost of living. As in many other countries, there were increased energy costs following the Russian invasion of Ukraine, but that was particularly marked in Greece. And still, many people are having to hold two jobs, even to just make ends meet, to survive. So while there's a general feeling that things are better, there is still a way to go.